and how they wanted to build it. And so we really wanted to create that greenfield space for builders to be able to do that. And so we did that. And it's been about 2 weeks that Sorbonne's been live. And it's been pretty awesome to see, not just even beforehand, we had testnet where folks were already building. We had 190 projects building there that are moving over to mainnet. But just to see, even at the inception of since March, since our...
You ever get that feeling that something big is happening, but nobody's saying it out loud? Like all the pieces are being moved right in front of you, but everyone's pretending it's business as usual. That's exactly what's going on with crypto right now, especially with XLM. Wall Street isn't ignoring it. They're studying it, building around it, positioning themselves, but not talking about it. Because when the system changes, the ones who knew early don't announce it. They prepare. Quietly. You've got to understand how these guys move. They don't chase hype. They create it. They don't buy the coins trending on Twitter. They fund the infrastructure years before the headlines hit. And that's where Stellar's been sitting this whole time, under the surface, woven into pilot programs, remittance corridors, government testnets. You've got big financial firms talking about tokenization like it's new, but Stellar's been built for that since day one. This isn't another speculative project. It's a bridge, a neutral settlement layer, and Wall Street knows it. Here's the trick though. The suits aren't going to tell you which network they're leaning toward. They'll drop vague phrases like blockchain-based cross-border systems or real-time settlement protocols. And you think it's just corporate speak. But when you start digging, the same names keep popping up. Stellar, MoneyGram, IBM, UNDP, all quietly linked in these payment modernization initiatives. The same kind of projects the IMF, World Bank, and BIS talk about in their reports, except they never say the token name. You've got to read between the lines. And that's what retail investors miss. They're watching price charts. Meanwhile, the real players are mapping out rails for global liquidity. They're designing a system that's not meant to collapse the banks. It's meant to upgrade them. It's not rebellion anymore. It's replacement through collaboration. And that's what makes XLM dangerous. Not to us, but to the ones who don't adapt. I've been watching how the tone shifted over the last 2 years. Remember when institutions said crypto was too risky? Now the same institutions are launching blockchain divisions, writing white papers, attending digital asset roundtables. They went from denial to design. And Stellar's sitting there like the quiet kid in class who's already done all the homework. It's fast, it's cheap, it's compliant. Everything they need to make this new financial plumbing work without blowing up the old one. You think it's random that Stellar's been working with MoneyGram to build an on-off ramp system that can turn cash into digital value instantly across borders? That's not an experiment. That's infrastructure. When those rails go live globally, the ones who are mocking XLM will be asking how they missed it. But it's always the same story. Retail laughs first, institutions move first, and then the public wakes up when it's already too late. Here's the part nobody's saying. This new financial system isn't something they're testing anymore. It's being phased in. The narrative you'll start hearing more often is interoperability. That's the code word. It means one network talks to another. Assets move instantly. Liquidity pools connect without friction. Stellar was built for that. And while the world argues over regulations, Stellar's team is sitting in meetings with policy groups, pushing for frameworks that make it fit in, not fight against the system. Wall Street's been quietly learning from DeFi, from stablecoins, from all the chaos. They watched what worked and what didn't. Now they want the control and the scalability. That's why they're coming back to networks like Stellar. Not because it's flashy, but because it's boring in the right way. It does what it's supposed to do, every time. It moves value. Fast. Secure. Cheap. And that's all that matters when trillions are on the line. It's funny. People think the next bull run is about speculation again. It's not. This one's about infrastructure. About who's plugged in when the pipes turn on. And when you trace the pipes back, guess what names keep showing up? Ripple, Stellar, Hedera, XDC. The networks that can actually handle volume. The ones with real partners. The ones the IMF keeps using in their sandbox reports, even when they pretend they're neutral. So when you hear Wall Street firms talking about digital asset liquidity networks, or the World Economic Forum discussing cross-border interoperability frameworks. Just translate it in your head. They're describing Stellar without saying the word. They can't yet, not until everything's live, not until the regulators give the all clear. But by the time it's obvious, they'll already own most of the supply through quiet partnerships and liquidity corridors they built themselves. This isn't hype. It's timing. You're either early or you're forgotten. And right now, being early to Stellar means understanding what it's actually built for. Not a quick flip, not another meme coin, but the digital plumbing of the next financial era. And Wall Street's already testing the water. When people talk about Wall Street, they still imagine guys in suits yelling on trading floors. But that's not how it works anymore. The real action is happening in quiet boardrooms, behind non-disclosure agreements, and in pilot programs that sound boring on purpose. That's where the real money moves. In whispers, not tweets. And if you've been watching closely, Stellar keeps showing up in those whispers. The truth is, the banking world never hated crypto. They hated the chaos. They hated the lack of control, the volatility, the noise. But the technology? They loved it. They just needed a version that fit their world. Something compliant, stable, predictable. And that's exactly what Stellar built. Not a casino, not a rebellion, a bridge. The kind of bridge institutions can use without losing sleep at night. Think about what Wall Street's always wanted. Speed, transparency, low cost, and liquidity that never sleeps. That's Stellar's DNA. It's a network designed for real finance, not speculation. It can settle transactions in seconds, handle millions of payments without breaking, and do it for less than the cost of a coffee. That's not sexy for traders, but it's gold for the people running trillion-dollar flows behind the scenes. Now here's where it gets interesting. Everyone keeps focusing on Bitcoin ETFs, like that's the institutional gateway. But what happens after the ETFs? Once they've packaged Bitcoin for Wall Street, the next play is utility, tokenized assets, CBDCs, cross-border liquidity. You think they're going to build that on slow, expensive chains that can't scale? No chance. They're going to use networks that already have the compliance baked in. And Stellar is right there. ISO 20022 ready, integrated with existing payment rails, and connected to MoneyGram's physical network of cash points in over 180 countries. That's not theory. That's a working model. Wall Street's not going to reinvent the wheel. They'll tap into systems that already work. And quietly, the architecture of Stellar has become that system. Open source enough to adapt, structured enough to satisfy the suits. The same way the internet's backbone was built long before Facebook or Google showed up, Stellar's rails are already there, invisible, waiting for the right level of adoption to light up. Here's the secret. Wall Street has been experimenting with tokenization for years. They've tested private ledgers, permission networks, consortium chains, and most of them failed. Why? Because they forgot the core rule of liquidity. You can't isolate it. Real liquidity needs openness, interoperability, and trust. That's what Stellar does best. It connects the old world to the new one. And while everyone's talking about bridges between blockchains, Stellar's been bridging between people and systems. Banks, fintechs, remittance companies, governments. You've got BlackRock talking about tokenizing every financial asset. Larry Fink dropping hints that the next frontier is digitized value transfer. You think they're going to build that from scratch? No way. They'll use the infrastructure that's already compliant and tested. Stellar's footprint with IBM's WorldWire wasn't just a side project. It was a prototype of global settlement. It didn't die. It evolved. Those same relationships, those same frameworks, are now being baked into the foundation of what Wall Street's calling the new financial internet. And if you want to see how they move, watch the money, not the headlines. Venture arms of major banks quietly funding fintech startups that just happen to use Stellar. NGOs testing aid delivery through Stellar-based rails. Central banks hosting digital payment experiments that mirror the exact mechanics of Stellar's consensus protocol. It's all there, hidden in plain sight. But they call it innovation initiatives or pilot infrastructure, not adoption. Here's what's wild. Every time retail gets distracted by meme coins or having cycles, institutional capital is creeping closer to Stellar. Because they see the utility. They know that when the speculative dust settles, the only networks left standing will be the ones that actually move money. Not promises, not hype, real value, real people, real use cases. And Wall Street's timing this perfectly. They're waiting for the narrative shift. Right now, the public still sees crypto as risk. But once regulation solidifies, once the next crisis exposes how broken the old rails are, that's when the pivot happens. The big funds will say, we're not investing in crypto, we're investing in infrastructure. And that infrastructure will look an awful lot like Stellar. Let's be real, these firms don't chase the green candles. They are the green candles. They create liquidity waves. They move in phases. Denial, accumulation, domination. Right now, they're in accumulation mode, buying up undervalued networks, funding key integrations, partnering with payment providers that already use Stellar's rails. They're positioning themselves for a system that will make cross-border settlement as simple as sending a text. So when you see Stellar trending for a day and then going quiet again, that's not weakness. That's stealth. That's the phase before the liquidity floodgates open. It's always the same playbook. Ignore, accumulate, reveal. Wall Street's not waiting for permission anymore. They're building the next layer under everyone's nose. And when it switches on, when those liquidity corridors connect, when those remittance hubs go digital, the world will call it innovation. But the ones who were watching Stellar all along will know it wasn't innovation. It was the plan. Here's the thing nobody wants to admit. When this switch flips, it's not going to look like fireworks. It's going to look like nothing. That's how these things always happen. One day you wake up, check your phone, and the same banks that used to trash crypto are suddenly using digital asset infrastructure to move billions. No announcement, no hype, just quiet, cold efficiency. That's how Wall Street plays it. They don't tell you what they're doing. They just do it, and by the time it hits CNBC, they're already 10 steps ahead. They'll rebrand Stellar as a new form of settlement layer, slap a corporate name on it, and make it sound like they built it. But under the hood, it'll be the same open-source Stellar network that's been sitting here for years, humming in the background, processing real-world payments while retail scrolls TikTok looking for the next meme coin. It's almost funny. People want drama, explosions, green candles, moon missions. But the real revolution never comes with noise. It comes quietly, through code, through adoption, through 1,000 small integrations that nobody pays attention to until it's too late. That's what's happening with Stellar right now. It's already connected. Banks, fintechs, remittance corridors, government pilots. These aren't hypotheticals anymore. You've got entire African payment routes running on Stellar rails. You've got MoneyGram using Stellar for on/off-ramping cash to crypto. That's real liquidity. That's people sending value across borders faster than banks can send an email. And that's the quiet part of the plan, the boring phase that the masses ignore. Because the truth is, adoption doesn't look exciting. It looks like infrastructure. It looks like 1,000 small deals that don't make headlines. But once those pipes are built, once the regulatory green light hits, once tokenization becomes a mainstream term, that's when the flood starts. Picture it, Wall Street funds, asset managers, banks, and fintech startups all plugged into Stellar's network at once. Not as crypto, but as digital finance. That's how they'll frame it. It won't even sound rebellious anymore. It'll sound inevitable. For efficiency and transparency in cross-border settlements, they'll use words that sound safe, regulated, boring. But behind those words, value will be moving through XLM, faster, cheaper, frictionless. That's the flip moment, when the language changes, when crypto becomes infrastructure, when decentralized becomes standardized. And while retail investors argue over price charts, the institutions will already own the rails. That's why I keep saying, this isn't a hype coin. Stellar's not here to entertain you. It's here to replace systems. And when systems change, they don't announce it. They migrate quietly, slowly, until suddenly you're living inside the new one without realizing it. Look at what's happening globally. Central banks are talking digital currencies. International aid groups are experimenting with blockchain for real-time disbursements. And financial giants are testing tokenized bonds and payments. Every one of those discussions comes down to the same question. How do you move value instantly, safely, and globally? And if you've actually been watching, there's one network that keeps popping up behind the curtains, Stellar. They're not screaming about it. They don't have to. Their partners do the talking for them. From the UN to MoneyGram to fintech corridors across Latin America and Africa, Stellar has use. Real, boring, practical use. And that's why Wall Street is watching. Because when the world goes digital, you don't want the flashiest network. You want the one that actually works. You want the one that's compliant, stable, scalable, and invisible enough to slide into existing systems without breaking anything. That's Stellar's entire philosophy. It's not about decentralization anarchy. It's about quiet revolution through function. The same people laughing at XLM for not pumping are the same people who laughed at Amazon in 2001 because it wasn't exciting enough. They don't get that the boring ones win. The ones building the plumbing while everyone else builds hype. So when you hear tokenized treasury bonds, or blockchain-based remittance corridors, or instant cross-border settlements, understand this. You're hearing code words, corporate translation for "we're using blockchain, but we can't say that yet." And the moment those systems go live, liquidity flows into the networks already prepared. There's no announcement pump. There's just silent usage, transactions, volume, fees, corridors. That's when the market catches on. But by then, Wall Street's already deep inside, holding the rails, running the flow, controlling the liquidity. That's why it's planned. That's why it's secret. Because they don't want retail front-running them this time. They saw what happened with Ethereum. They watched early believers turn into millionaires, while institutions were still writing research papers. They're not going to miss the second round. They're building it first. And here's the punchline. The switch doesn't have to flip in one day. It's flipping already. Every new integration, every remittance partnership, every regulatory milestone. That's one more lever turned on in the new system. The sound you're hearing isn't silence. It's calibration. When it finally hums at full power, when the public narrative shifts and institutions start using words like real-time settlement and instant liquidity corridors, you'll realize it's been running this whole time. You just weren't looking in the right direction. But here's the difference. You know now. You've been watching it unfold. You've seen how every little move from Wall Street, from the IMF, from the payment corridors, all points in one direction. Digitized money, programmable liquidity, real-time settlement. And XLM isn't just a part of that system. It's woven into it. The quiet backbone of a new economy nobody's officially named yet. When I say it's planned, I don't mean in some evil shadow cabal way. I mean it's structured, designed, like a chess match that's been happening for years, and the last few pieces are sliding into place. Wall Street's not going to tell you they're integrating crypto rails until it's done. Governments won't admit they're testing blockchain infrastructure until it's already inside their payment systems. That's the script. It's always announced after execution. So don't wait for permission. Don't wait for mainstream validation. By the time the press catches up, the price will have already adjusted to reality. Because the truth is, this next run won't be hype-driven. It'll be utility-driven. Actual use, real demand, and Stellar, with its speed, compliance focus, and existing corridors, is sitting in that sweet spot nobody's watching hard enough. Let me be real with you. I don't care if it's not trending. I don't care if influencers aren't talking about it. That's noise. The big players aren't tweeting. They're signing NDAs and building pipelines. And you, right now, have the privilege of seeing the pattern before it becomes obvious. That's what getting in early really means, not gambling, but recognizing where the current's flowing and stepping in before the tide becomes a wave. So here's the challenge. Don't let them distract you with volatility or fear. Watch the fundamentals. Follow the partnerships. Read between the lines. Because while everyone else is waiting for someone to say it, you already see it. Drop your thoughts below. I actually want to hear how early you think we are in this setup. Like, genuinely, what's your timeline? Are we in the last phase before everything flips? Or are we still in stealth mode? Let's talk in the comments. And if you're still watching this far, you're one of the few who actually get it. So don't just nod and move on, subscribe. Share this video with one person who still thinks crypto is dead, and tell them, it's not dead, it's disguised. The plan's already in motion. The question is, are you in position when it activates?